Did you know that there is optimism among Tesla stock enthusiasts on the possibility of a repurchase of Tesla shares? Investors in Tesla have been pleading with Musk to repurchase Tesla stock for months now. They now practically guarantee that Musk will act in that manner. You would therefore not want to overlook this information. At the board level, the buyback concept has been discussed in great detail. In general, the board believes that a buyback makes sense, but we want to make sure that the procedure is followed correctly. However, Elon Musk, the CEO of Tesla, stated on the most recent Q3 2022 earnings call that it's certainly possible for us to do a buyback on the order of $5 to $10 billion. A number of problems, including a buyback of Tesla stock, were discussed by Elon Musk, the CEO, and Tesla personnel. Musk clarified that Tesla still has the capacity to undertake a $5 to $10 billion buyback, even in the worst-case scenario for the upcoming year, even though 2023 might turn out to be a challenging year. It is apparent that this is currently awaiting board approval and scrutiny. It's likely that we'll do some meaningful buyback, Musk stated. While the market teams prioritize the short term, he continued, it is crucial to concentrate on the long term. Even Steven content producer Mark Ryan of the channel Solving the Money Problem thinks buybacks of Tesla stock are possible. With a particular emphasis on Tesla, he analyses the most recent developments in the tech and financial industries on his channel, Solving the Money Problem. Steven stated in a recent video that he would not be shocked if Tesla decided to repurchase stock in the upcoming quarters. However, he believes that the stock market would be taken aback, which would lead to a possible increase in the price of Tesla shares. Steven alluded to the SP Global Ratings study update on Tesla in this advertisement. SP Global Ratings upgraded Tesla from BB Plus to BBB in the research update that was published in early October, citing increased production and promising cash flow forecasts. Published financial research and analysis on stocks, bonds, and commodities. SP Global Ratings is an American credit rating firm and a branch of SP Global. Moreover, it was determined that Tesla's future seems stable. SP Global Ratings made a number of points in the rating action overview. First off, Tesla Inc. exceeded our projections for production and deliveries in the 9 months that concluded on September 30th, 2022, and the company's ramp-up in worldwide capacity suggests that it will be able to fulfill the robust demand for its products through 2023. Second, because Tesla continues to show market leadership in electric vehicles and maintain strong manufacturing efficiency that supports strong EBITDA margins and sustained positive free operating cash flow above their previously established upside triggers, the agency now views Tesla's credit profile more favorably. Possibly the most significant update came from SP Global Ratings, which upgraded Tesla's ratings, including the issuer credit rating and issue level ratings from BB Plus to BBB. In conclusion, the agency stated that the steady outlook represents its belief that Tesla would continue to have low levels of debt while maintaining its significant market share, profitability, and liquidity in the face of a faltering economy and a more competitive market for electric vehicles. The rationale for the rating decision was also provided by SP Global Ratings. First, despite continuous supply disruptions and challenges, Tesla's production and deliveries for the year ended September 30th, 2022 show outstanding execution on capacity increase. In line with its average annual growth plan over a multi-year horizon, Tesla manufactured more than 365,000 vehicles in the third quarter, bringing its year-to-date numbers to nearly 930,000 vehicles, up nearly 50% year over year. The rating agency now projects that Tesla will sell 2 million units in 2023, which would allow it maintain a healthy market share with NEVs in the face of escalating rivalry and assertive global carmaker launches. Additionally, the agency projects that during the next 2 years, Tesla's worldwide market share for BEVs will stay between 15 and 20%. Subsequently, our enhanced understanding of Tesla's operations validates its potential for steady and enduring free cash flow in the upcoming years, based on industry-leading EBITDA margins of approximately 20% compared to the upside trigger of 18 and well above our 10-point threshold for above-average margins for automakers. SP Global Ratings expects Tesla to sustain sales of over 10% in 2022 and 2023, up from the previous upside trigger of 2%. This is in spite of significant costs associated with the expansion of its production facilities in Austin and Berlin, continuous disruptions in the supply chain, and growing commodity prices. Then, when the world economy deteriorates and EV competition heats up, strong technical capabilities and a wider selection of reasonably priced goods will be essential. The rating agency states that Tesla's size, reach, and product variety still only account for about 1.5% of the worldwide light car industry, which is projected to reach 80 million units by 2022. In order to maintain its competitive edge, maintain rapid expansion, and increase its market share, Tesla must lower the overall cost of EV ownership, including insurance and maintenance, and increase market share. Lastly, the BB grade is further cushioned by Tesla's high liquidity and our forecast of a cautious financial approach. As of June 30th, 2022, Tesla had over $18.3 billion in cash and cash equivalents. S&P Global Ratings anticipates healthy cash flow through at least 2023, so the agency is confident Tesla will continue to have ample liquidity. These numbers are far higher than the cutoff point set for General Motors Company and Ford Motor Company. According to the research note, Tesla appears to be readily able to finance its global development while managing supply chain and logistics-related constraints in the industry that will last until 2023, since it has more cash on hand than total debt. The research note also stated that in an increasingly competitive environment for electric vehicles, Tesla is expected to maintain low levels of debt as it maintains its significant market share, profitability, and good liquidity, which is reflected in the rating agency's stable outlook. Additionally, S&P Global Ratings describes circumstances in which, based on the circumstances, they might reduce the ratings. Either Tesla takes on a more aggressive financial strategy in terms of shareholder distributions, expands its captive finance operations, or makes acquisitions in other business areas such that its financial cushion is considerably reduced. Or it can't maintain strong FOCF because of slower growth or more than anticipated spending. The rating agency will be able to downgrade Tesla's rating in one or both of the situations. However, if Tesla maintains its first mover advantage as EV demand rises and competition heats up, its worldwide light vehicle market share is likely to surpass 5%. In that case, Tesla's rating might be increased. Beyond 2024, it seems expected to continue its previous trend of free cash flow. It also continues to be dedicated to a responsible financial approach consistent with a higher rating. That said, analysts predict a Tesla stock buyback in the near future if the company keeps up its strong performance. Naturally, if the board gives its approval, something that investors can only hope for. A stock repurchase may be questioned by some. A stock buyback, sometimes called a share repurchase, is when a business uses its accrued cash to buy back its shares from the market. A repurchase of stock enables a business to invest back into itself. There are fewer outstanding shares on the market as a result of the company absorbing the shares that were repurchased. A buyback increases shareholder value by the portion of each investor's ownership that remains after the total number of outstanding shares is decreased. Rather than diluting shareholder wealth, the corporation concentrates it in the case of a buyback. Companies can gain from stock buybacks since they can preserve stock values, combine ownership, and replace dividend payments. Since they get their money back, investors can profit. Repurchases, however, aren't always advantageous to investors. Musk seems to have alluded to a Tesla stock purchase before he officially announced the intentions during the Q3 results call. In response to a tweet from Leo Kogawan, an Indonesian-born businessman who claims to be the third largest private investor in Tesla, who stated that Tesla is experiencing a PE ratio compression that can only be resolved by a buyback and or by a twofold increase in earnings, a Musk sparked speculation about a buyback during the second week of October. Musk only noted sparking rumors that Tesla would begin a share purchase for the first time. Calls for the manufacturer of electric vehicles to allocate a portion of its substantial cash reserve to investor returns escalated as a result. In the meantime, a $10 billion share buyback was suggested in an open letter to the Tesla board by co-founders Gary Black and David Callis of the Future Fund, of which Tesla has the single largest investment. In our opinion, Tesla is now running its business with exceptional financial soundness, holding $18.9 billion in cash and marketable securities together with almost no debt. We think this is a special chance to purchase your stock. Don't forget to subscribe to our channel so you can watch the most recent content about Tesla stocks.